Are you looking for high-performance AV distribution that just works? Meet NetVio, a UK-based innovator delivering cutting-edge AV over IP, HD-Base-T, HDMI, USB, and Dante AVA hardware, backed by intuitive, license-free configuration and control tools. The NetVio 360 configurator and license-free NetVio Go user control app makes setup and user control effortless, while the open universal API and pre-built drivers ensure seamless integrations with Control4, Crestron, RTI, QSYS, and more. NetVio is exclusively distributed in Australia by Chords Australia. Check them out at netvio.com.au. That's netvio.com.au. Hello and welcome to Master Integrator, the podcast that helps you run a smarter, stronger, and more sustainable integration business. I'm your host, Paul Skelton. Being a sole trader is hard enough without having to play accountant, bookkeeper, and tax agent on top of everything else. But what if that part of the job could just disappear? My guest today is Karan Anand, Managing Director of Hnry, a digital accounting service made for sole traders, freelancers, and independent contractors. Hnry automates your tax, BAS, super, and more, with no subscriptions or spreadsheets. In this episode, we cover the most common financial mistakes sole traders make, how Hnry handles everything from GST to super contributions, what you can and can't claim, when to transition from sole trader to company structure, and why automation is just as valuable in business as it is on the job site. This one's essential listening for anyone working for themselves and wanting to spend less time on admin and more on the tools. Thanks to our sponsors, Chords, NetVio, and Connected Magazine for supporting this episode. This is Master Integrator. Here's Karan. For those who might not be familiar with Hnry, what is it and what does it specifically do to support sole traders and small trades companies?
Sure. Well, thanks. First of all, thanks for having me on the show, Paul. It's a real pleasure to be here. So Hnry is a digital accountancy focused purely on the sole trader market. So we operate in Australia, New Zealand, and the UK. And the unique thing about Hnry is the construction of the business itself. So we're both accounting software and we're accountants as well. So if you think of how the Hnry proposition works, if you're self-employed, the first challenge you're going to have is how do I get invoiced and get paid by my customers, and how do I get tax compliant from the outset? So what we do is we provide each of our customers with a Hnry account. The Hnry account looks and feels like a bank account. What we do is you get your income from your clients or customers paid to that Hnry account, and we automatically deduct the right amount of income tax, GST, Medicare levy, student loan. If you want to make any contributions to your superannuation or a high interest savings account, you can set those automated allocations out, and we then pass the remainder of that money through to your personal account. So you feel like you're being payrolled in the sense of your taxes taken care of in the same way as would if you were employed by someone, and you're compliant from the get-go from a tax perspective. But then you also know that the money that hits your own bank account is yours to spend and yours alone. You don't have to keep any of that aside or get a rude shock at the end of the year with a huge tax bill. The second part of the Hnry service is tools for sole traders. So your ability to issue quotes, issue invoices. We provide you with a Hnry Visa debit card, which allows you to make purchases to run your business, and then you can claim the expenses for that automatically. And the third part of the service is we're your accountant as well. So we will lodge your BAS for you every quarter. We will lodge your income tax return for you. And that's all part of the service. If you get any gnarly letters or emails from the ATO, we handle them for you on your behalf. And, as you would expect from any accountant, if you've got any questions about your financial health, if you want any advice from a tax perspective, you can always come to us. We're available during business hours. And so it's a pretty neat service for people who are self-employed who don't want to deal with the sort of multi-vendor relationships of having some payment software and some invoicing software and some accounting software and a different set of accountants, and you're paying a ton of money for all of those. Managing all of those is really complex. Hnry's all of that just under one roof.
Yeah, and I say this to be very open with people. I mean, I use Hnry. That's how I first, reached out because it's made my life easier. I'm a sole trader, which some people probably don't realize because my role with the association, but I am a sole trader. So it's interesting because I didn't get into this to worry about accounting. And I think that's probably what a lot of integrators out there are the same. They don't necessarily care about the accounting side. They don't want to be doing invoicing and chasing stuff and paying tax and lodging BAS statements. So it's quite a good service from that perspective because realistically, you don't actually have to do much, really. And from my perspective, and I don't like maths, that's been great.
Yeah, totally. I mean, look, honestly, if you think about how society works, we want everyone to be a vocational specialist in the thing that they do so they can make money and make a contribution to the economy. So integrators are such things, our customers span the whole breadth of the economy. We've got creative freelancers, we've got healthcare workers, we've got white collar contractors, we've got gig workers, we've got tradespeople. We want a carpenter to be a very good carpenter. We want a disability support worker to be a very good disability support worker. Unfortunately, in Australia, it's mandatory to do a tax return, and then that just gets more complicated when you own your own business or you're self-employed. So, to a certain extent, you need some degree of financial literacy, but obviously our education system fails us on that front. And so the ethos of the business, like our tagline is never think about tax again. Because unfortunately, like, death and taxes, two things you have to deal with. So at least if we can take one of those things away, you can then, for the period that you're working, you can actually just then focus on being the best integrator possible, being the best tradesperson possible. And, don't worry about this really boring, mundane part, which, sadly, I mean, Paul, you probably remember the time of your life, perhaps pre-Henry, it takes up a lot of time.
It really does and can be very expensive.
Yeah, absolutely, absolutely.
So obviously, well, we're recording this end of August. We're a couple of months into a new financial year. A lot of companies and a lot of sole traders would be currently dealing with lodging tax returns for the 2024 to 2025 financial year. From your experience, then, what are some of the biggest mistakes that they're making? Are there things that they're not claiming? Are there things that they are that shouldn't be? I mean, where are they going wrong?
Yeah, it's a great question. So if I sort of step that question up a level, the biggest issue we see conceptually is particularly for people who are new to self-employment or new to sole trading is the jump from being employed to self-employed is that they don't think about how much money they actually have to set aside for tax. And if you haven't set money aside, particularly in that first year, you can get a huge bill shock at the end of the year. And to a certain extent, particularly when we're filing returns for people who are either very new to Henry or are just joining Henry or are coming in because on the back of a rude bill shock. That's the thing we're helping them sort of navigate, trying to make sure they get out of the debt cycle. Obviously, if they've been using Henry for a number of months or for a number of years, they're not going to have that bill shock. The other thing that we're seeing specifically this year is sort of some of the last remnants of some of the government policies, particularly in Australia, that were in place to help bolster the economy during COVID have basically been removed. And so things like the lower middle income tax offset have been removed. And so what people are finding is that some of the nice little tax refunds they would have got at the end of the 22 or 23 or 24 tax season, they're no longer there. And so not necessarily with Henry customers, because we try and keep them as compliant as possible throughout the year, but we're sort of seeing the evidence across different parts of the economy is that people are still getting refunds, but they're either getting small refunds or they're actually getting payable amounts. And that's obviously not something you ever want. You don't want to be owing the tax man more money at the end of the year. To your last point around what they're claiming and what they can't claim, it's obviously that's a perennial issue. Every year there are the changes to legislation. It's hard to keep on top of it. But at the same time, there are always those people who are like, well, you could probably, I don't think you're claiming enough. And there are those people going, I don't know if you're going to get away with that jet ski. I don't think the ATO is going to see to that too kindly. And so as their tax ages, we navigate all those scenarios with them.
Okay, so you said there obviously people who are just starting out as a sole trader or they're going from employment to their own operation. Is there a rough guide of potentially how much they should be setting aside that first year? Because they're probably not, well, if they haven't done their first lodgement, they're not doing the pay as you go. So how do they work that out?
Great question, right? So it's really, I would love to say it's straightforward. The challenge we find is actually the advice that they're given perhaps by sort of a cookie cutter accountant response. It can be somewhat unsatisfactory, right? So maybe what's more helpful if I talk through the variables that go into coming up with a number like this. So the first thing is, are you making the switch into self-employment basically cold turkey? So are you quitting your job and going, I'm going to be a sole trader now? And it kind of is dependent on which time of the financial year you're in. As far as the tax office is concerned, they look at all of your income holistically and apply the marginal tax rate or the progressive tax rate on the entirety of your income. And they really only care about it at the end of the year. I mean, if you've been self employed for a few years, you probably would be on this thing called in Australia called PAYG installments, where you may make quarterly payments. But let me park that for a second. But really, they care about the entirety of your income. So if you've been salary employed or are salary employed and you add self employment on top of that, it feels like the tax rate for self-employment would be higher because it's kind of adding to the total income you've already earned, and you probably claim the tax-free threshold on your salary income anyway. So that's the first thing, is to work out what's the combination between your salary income and your self-employment income. The second thing is actually, like, in that first year as well, is like, how much do you think you're going to make in that first year, which is obviously the key determinant on how you're setting aside the tax. The challenge I talked about around the common refrain from, like, the accounting industry is they say, look, you should probably be keeping 30% aside for tax. But if you think about for income tax, if you think about 30%, off the top of my head, I think you need to be earning sort of more than 150, 180, maybe even 200 grand for your collective marginal tax rate to be 30%. And so you end up just keeping too much money aside that you can spend. The way we solve that problem ourselves is every payment you get, we are forecasting your income tax rate and then applying the right tax rate to each payment based on how we are learning the behaviors of your earning patterns as well. But as a rule of thumb, if you're looking to keep it aside yourself, there are tax calculators available. We've got one on our website. I know Money Smart has a really good one. It's a government service where if you could forecast your income, it'll sort of tell you how much tax you're likely going to have to pay, and then just having the discipline of keeping that money aside if you have that discipline, or use us because we do that for you.
So a lot of integrators, and I imagine this is probably similar across a lot of trades, but they work on incredibly slim margins.
Mhm.
Sometimes probably a little bit too slim, might be a little bit uncomfortable. But how would they navigate this? Because a lot of them would probably not be happy with the idea of automatically losing part of that to tax and paying as you go.
Yeah.
It's a shift in mindset, but how do you navigate that with them and I guess explain to them that this is a way to avoid that big tax bill?
Yeah, that's a great question, right? So I think there's probably two things we'd say. One is that at the end of the day, income tax and GST is not your money, right? It's the government's money, unfortunately, as much as we'd like to keep it for ourselves. And the thing that changes from being an employee to being self employed is tax calculations and tax payment is your headache. So, whereas when you're employed, it's your employer's headache, which is actually a really interesting mindset shift you have to make when you switch from one to the other. So, the first thing you think about is how much time do you want to spend to do the calculation, to understand how the lodgement process works, to understand how the payment process works and making the payment? Or do you want that pain gone away from you? The second part, which is really important around what we do, is we don't use a annual or quarterly retrospective expense claiming process. Our expense claiming process is a real time thing. What that means is every time you make a business purchase and you take either with your Henry Visa debit card or separately, you take a photo of the receipt, you upload it in the Henry app. It takes you all of 20 seconds to do that. We will take that expense into account in then varying your marginal tax rate. So every time you make an expense, your taxable income goes down, therefore the effective tax rate goes down. And so the next time, you get paid and tax is taken out, effectively less tax will be taken out the next time. And so that's better for your cash flow. You're not waiting, to the end of the quarter or the end of the year where I'm, submitting my expenses and hoping for a bit of a refund. Obviously, money in your pocket earlier because your marginal tax rate has been lowered because your expenses are being calculated real time is better for you. So there's two things there, right? One is a time thing. How much money do you want to spend calculating this? And second is, can I pull the claiming of my expenses forward so I'm effectively paying less tax every single time? And based on that sort of argument, we've been reasonably successful across Australia and New Zealand, and there's tens of thousands of customers who use Henry to access these benefits.
So you're probably in a very unique position because you do obviously a lot of different trades and different trade businesses. It seems at the moment, on one hand, I'm seeing a lot of people who are going out there and starting their own entity, own trades business. But this other hand, I'm hearing so much about companies going under, and a
Mm.
lot of them are going bankrupt. So I guess from your perspective, what are you seeing out there? Is how healthy is the market? Is it all doom and gloom? Or, I mean, what are you seeing among the trade customers that you have? Is it healthy?
Yeah, look, it's a really good question. So we have a publication that we produce once every, well, 3 times a year. It's called the Henry Sole Trader Pulse. It's actually an independent analysis that we get a separate sort of statistical polling agency to do, and they poll 500 sole traders from around the country. They do 500 in Australia and 500 in New Zealand, and we publish the results. And really, what we're trying to get is like a statistical snapshot of the performance of different cuts of sole traders from across the country to answer questions exactly like this. And what we learned in the last one, which was published late June, early July, so reasonably recently, so about a month ago, was there are like multi speeds in the economy at the moment. And so one of the really positive things we saw, which was surprising but very pleasing, was younger sole traders are actually doing a lot better than what we expected. And they're doing better generally than the sort of malaise in the macroeconomic conditions as a whole. And we attribute that to a couple of things. One is that the economy as a whole is people are becoming more comfortable with having multiple sources of income. And just that's their way of working and living. And those people who have sort of, you know, digital natives, and they're now getting a little bit older. And so they're comfortable with that. Actually, this 9 to 5 working for the man is actually it's just never going to be my MO. I'm never going to operate like that. And they've been trading like that for maybe 5 or 10 years, and they're really sort of finding their feet around those sources of income. So they're getting better and they're getting more confident and more bullish about their prospects. I think the other thing is it's possibly something which is in contrast to your question specifically around the trades is from the observation that we made is that the observations in the pulse rather is demand is still reasonably strong. But whereas for other parts of the economy, the impacts of inflation have definitely settled, I think the cost of supply, the cost of inputs, and just sort of existing legacy remnants for the last 3 or 4 years of the cost of doing business is still really impacting the trades. And so they're like, look, I'm making, more money perhaps at a top line perspective, but I'm also spending a lot more. So to your point around the margins, what it means is that there hasn't really been much margin improvement. So you're like, I'm working just as hard or just harder and I'm earning good revenue, but I'm not taking as much home as I'd like at the end of the day. So I think that continues to be a challenge in the trades. I don't know if that aligns with what you're seeing yourself, Paul, or what other of your members are seeing.
It definitely seems to be. And I think the challenge that we have from an association's perspective, where I work with CEDIA, is that people don't like to share their financial
Yeah,
information, and it makes it very hard even to work out call out rates and stuff like that. So it can be a little bit of guesswork sometimes, where you sit there and you have to base it on a very small kind of subset of data, and sometimes you sit there and go, it sounds right,
yeah,
but whether it is or not, it's kind of a guess.
yeah,
Um,
yeah, 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 and that's right, and that's why to a certain extent we do go and seek out. I mean, this we go we pay this independent pulse, the Result Strategic, quite a lot of money every year. And Result Strategic, it's the same agency that the Sydney Morning Herald and the Age used to do their political polling because we want, you know, you highlighting the absence of data. Like, there's really no data for the self-employed. Like, there's lots of small business data, but when you're talking about SMEs, you're actually talking about companies that are turning over up to 10, 20, $30 million a year. Like, as it pertains to your listeners and your members, like, that's a very foreign concept, and they're talking about completely different things relative to the problems that sole traders face. And so having this data set is actually quite useful in us helping to sort of answer some of the questions you just highlighted there.
yeah, and if you can figure that data out, I think you'd make a lot of money in getting that out.
We share it for free. So happy to flick you a link to it, and then maybe you can post it in the show notes as well if people are interested in some of this data.
Yeah, absolutely. I definitely think there would be some interest in that. Connected Magazine is your go-to publication for the commercial and residential AV and smart home industry. This issue, Phil Tan dives into Wi-Fi 7, what it means for integrators, how it can transform end-user experiences, and whether your business is ready for it. Check out this and more in the latest edition of Connected, plus the website for daily AV news and product updates. Links are in this episode's description. How is the best way to navigate this system? I guess to know what they can deduct, what depreciates over time, what they're actually entitled to claim.
Yeah, great question. Right. So the first sort of the golden rule around making any claim for your business is it required and principally used for you earning revenue in your business? And if you can hand on heart say that it's a requirement for me to conduct my business, then generally it's claimable. Obviously, everything I'm saying is not personal tax advice. So if you do want personal tax advice, please contact us or contact another registered tax agent. When it comes to expensive purchases, one thing that's been in place for the last few years, which is quite valuable, and I'm sure a number of your members know about it, is it's been known by different names, but generally it's called the instant asset write off, which has been of a lot of benefit to smaller businesses, where essentially the way it's been legislated most recently is if you have annual turnover of less than $10 million, you can write off the value of any asset that costs you $20,000 or less, which, to be honest, if you're buying tools, which are in the thousands or tens of thousands of dollars, is super valuable. And that technically expired at the end of the last financial year, but the government did make an election promise in the Australian election, which was a couple of months ago, that they would extend that this year. I don't believe that legislation has passed just yet, but there's an expectation that it will. So that's one of the things which is really, really valuable, which means that you can claim an immediate deduction for an asset that you might use for a few years, and that's of huge benefit for anyone who's looking to make large claims. Other than that, there are specific rules for specific industries based on the nature of the work. And then that's when having a good accountancy support is really valuable for you to sort of get your head around that.
Okay. And I guess that's also where you guys come into it, because I know whenever I upload a receipt and if I've got the wrong category or whatever it is, I always get that flagged and sent it back to say it either isn't eligible or I've got to categorize it in a different way.
Yeah, yeah, exactly. And in theory, that's what any good accountant should be doing. And so we hope that provide that service to you sort of in a timely fashion. If I come back to my previous point from a couple of minutes ago, the quicker we can get that back to you and the quicker you can either re-upload it or recategorize it or check that it's actually accurate, then once it's submitted and it's approved, then we can actually make sure that we take that into account in your tax calculations and get you that tax relief going forward as well. Particularly if you're making expenditures of like in the thousands of dollars, you want to make sure you claim those as quickly as possible to get your tax rate down as quickly as possible as well.
Yeah, absolutely. So in the lead up to our conversation, I did actually send around an email and put out on social media that we were going to be having a conversation. So a couple of integrators could send over some questions. I do have a couple from the audience I wanted to float past you because I kind of thought there's probably a few integrators dealing with the same issues.
Yep.
Okay, so the first one, systems integrators often balance multiple revenue streams, so hardware and equipment sales, installation, consulting, even subcontracting. How can sole traders best separate and manage those income types for tax purposes?
Great question. So in Australia, the ATO doesn't actually necessarily care where your income comes from. They care more about the entity type you're trading under when it comes to the income. So, and let's take it as an example. If you're earning that through a salary versus if you're earning that through self-employed income, they care about that distinction. And then they obviously care about the quantum of the income. A lot of people have a misconception that I should have, and when I say misconception, it's not their fault. Our tax system is confusing for many, 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 many reasons. And this is one of the reasons for it is that any individual can only trade under one ABN. But if you have multiple work types or multiple professions, you may be an integrator, but you may also be an Uber driver. You have to treat the income and expenses of those separately, but under the same ABN. You might look at me puzzled and go, how do I actually make that work? It's like, you know, the ATO has flipped that problem to you. So that's the problem we solve on your behalf. But as far as if you're an integrator earning different revenue streams and it's all under a self-employed umbrella, they don't actually necessarily care. What they care about is the total income you earn during the year, the total expenses you incurred, what your taxable income is, and then what the effective tax rate what you need to pay is. Now, when you complete a tax return, which again is something we do on your behalf, The expenses need to be categorized into the different areas because that's how the ATO requires expenses to be captured. But again, it all leads to a single number at the end, which is what's your effective tax that you owe and have you paid the right amount. So it's not something that I would advise you to get overly concerned with unless the income is being earned from those different sort of types of entity that you might be working under.
Okay. So the next question is superannuation and GST are two areas that often cause confusion. When and how should I register for GST? And does Henry help with super contributions and navigating that system?
Yes, great question. So the rules in Australia are you need to be registered for GST if you earn over $75,000 a year. There are, you know, pros and cons to be registered for GST under $75,000 a year. The pro is that you can then claim GST on the expenses that you make, on the expenses that you incur rather. But the con is obviously then it requires typically a quarterly BAS lodgement to be made. Those are pretty straightforward again. If you're a Henry customer, we do those for you as part of the existing service we provide, and we make it a super simple process. There's also a perception that having an ABN and being GST registered gives you a sense of higher professionalism when you're engaging with customers and clients. But that's at your own discretion. But if you earn over $75,000 in Australia and it's $60,000 in New Zealand, it's a mandatory requirement. The superannuation question is a really good one, and it's a challenging one. Like everything else in our financial regulatory system, it's a bloody complicated thing to understand. So, in general, contractors are not required to pay or earn superannuation. There are some rules where you might be entitled to receive what are called superannuation guarantee contributions, which are the same thing, the mandatory contributions you get from an employer if you were employed. And that applies when you are paid mainly for your labor. Now, there is a real gap in terms of knowledge that exists in the economy around for a lot of clients or payors or employers when they're required to pay that for a contractor. So if you're unsure, I would suggest you seek advice on this front because there are specific tests the ATO have created, but that is a very current point of legislation which is changing at the moment and has been changing with the change in government in Australia in the last 3 years. Otherwise, because in most cases, sole traders aren't required to collect or pay superannuation, it's a voluntary contribution. In Henry, the thing that we provide for you is the ability to automate those contributions. So we have this feature called allocations where for every payment that comes in, you set a rule, go, here's my superannuation fund, here's the details of it. I'm with Australian Super or CBUS or whoever it is. I would like to set 10% of all my payments to go to that superannuation fund, and we make that go for you automatically. There are significant tax benefits for doing this. Contributions to superannuation up until $30,000 are taxed at a lower rate than your income. So if you do have the discretionary income where you're able to make super contributions, depending on your financial circumstances, it can be a really good tax advantageous thing to do that builds your long-term wealth. We do automate that for you, but I would urge any of your listeners to go and seek out advice if they are actually liable to receive superannuation guarantee payments from their customers, because in some instances, it's actually a requirement for contractors too.
So at what point should I consider moving from sole trader to company structure?
Great question. And it's something, again, which is a broad misconception, which has probably been peddled by perhaps the accounting industry over many, many years. But a sole trader structure in Australia, unlike some other jurisdictions, is a recognized entity trading class. So the ABN sole trader provides you and affords you with certain rights and certain obligations as well. But it's a recognized trading class. And that's why there's an ABN and then there's an ACN, you know, which is your Australian company number versus your Australian business number. You can do most things if you're intending on just being a sole trader and working for yourself and probably never going to employ a bunch of people or take on credit or take on debt or take on external shareholders. You can pretty much do all the things you need to do as a sole trader without ever setting up a company structure. You can still have your own trading business name. You can still issue invoices, tax invoices to your clients. You can still be GST registered. You can collect GST and you can claim GST for your expenses. You can still hire staff, subcontractors, or employees and pay them. You can do that all under the context of a sole trader structure. Really, the time you should be thinking about moving into a company is when you're getting into, I really want to grow this business and take on lots and lots of staff. But specifically think about it from the perspective of, I really want to take on external shareholding because I want some investment into my business to try and grow it. I want to take on large amounts of external debt. Sometimes banks like the legal separation that a company provides you. And if you're looking to take on, different types of or different forms of credit as well, that's where it is really advantageous to you, again, from a legal separation perspective. But again, like anything, pros and cons, right? The pro of being a sole trader is your compliance overhead is much cheaper and much simpler. The con is it might restrict your ability to access some of those things I just mentioned. The pro of a company is, enhances your ability to access some of those things, but it's a lot more expensive, not just from the setting up, the maintenance as well, because you're dealing with the tax obligations for you as an individual, but you as a company as well. But then just the ongoing, every year you have to go and pay fees to ASIC and make sure, all of your documentation and everything is kept up to date in that, which is another headache that you or your accountant or financial advisor have to manage on your behalf. So I would say the time to think about it is think about, where do I want to take my business? If I'm really looking to grow and access external capital, that's probably the time you think about switching to a company. If your goal is just to grow your own, like, I want to take on more customers myself and I want to increase my charge out rates, it doesn't matter. ABN Sole Trader will suffice for that.
So that's quite interesting. And this isn't one of the questions written down. It's just based on what you were saying there. But I didn't realize you could actually employ staff as a sole trader. So that's quite
Okay.
fascinating because we're talking about bringing in an apprenticeship program into the industry. So if there's someone's a sole trader and then they also want to bring in an apprentice, they can still do that.
Yep, they absolutely can. Yeah, and we will, I mean, again, if it's you, Paul, for example, we don't have payroll through Henry, but we have a payroll partner. You can use any payroll software you want. You pay them, you tell us the amount you paid them, and we will do your BAS as the business owner, which includes the PAYG withholding, which is one of the components of the BAS for you as well. Because again, you have to submit that as a business owner, which as an ABN holder, you're a business owner of your own business.
Is there a limit to the number of staff you could bring in before you had to move to a company structure?
Not legally, but I think you get to a point where you might expose yourself to larger liability risks, which you then want to domicile in a company. But we have customers who have 1 to 5 to 6 staff who happily operate as a sole trader with Henry, and they have no, issues with that. Thankfully, like paying staff, payroll software is pretty good these days in the market. There's lots and lots of alternatives. It scales pretty well with staff members.
Yeah, that's fascinating. I did not realize that. Um, okay, so back to the questions. Last question that someone sent in. Travel is very common in our industry. So site visits could be interstate to go to training or a trade show. What are the rules around claiming travel expenses as a sole trader?
Yeah, good question. So travel directly relating to your income is generally deductible, depending on the nature of travel. So fuel, flights, accommodation, but you need to be careful that it's travel away from, your day to day going from home to work. That's not deductible. And that's one thing to be considerate of. The second thing is mixed use travel. So I'm going overseas and I'm attaching a holiday on the back of it. You need to apportion that quite carefully. And this is where like good record keeping is really, really important. And that goes for any sort of expenses. So making sure that you are categorizing and classifying what component of that travel was specifically for business purposes versus what was for leisure purposes, and not just apportioning, I flew for that conference, but I stayed 3 days for the conference and 10 days for my holiday. So I'm only going to claim 3 days of accommodation, but my whole flight, you need to take that into account from your entire expenditure of your holiday as well. And so, I mean, I think the good news here is that travel is claimable if it's a requirement of earning your income. Just be careful around the mixed use travel and using I'm going to work today, so I'm going to claim the mileage on that. You can't actually claim the mileage. You're just going back and forward from, your place of work to your place of residence.
Okay. So there might be a few people listening to this who aren't sole traders. There might be small business operators. Is there a way for them to engage with Henry as well?
Not at this stage, unfortunately, where the service only operates for sole traders. if they've got subcontractors as well and they're looking for we have a number of company proprietors and mostly in the trades, in fact, who engage subbies, and those subbies are sole traders, and they feel a duty of care towards their subbies, saying, look, you're a 22-year-old, you got no idea what you're doing here, you're going to burn all that money. I want to help set you up with some system that's going to keep you on top of things so that you make sure that you're not getting into tax debt in your early to mid 20s. So we have a lot of tradies who come in who will, people in the trades will come in and advise us, look, can you take on some of my subbies as customers? And we're more than happy to. We are focused on the self-employed economy in the sole trading sector. It's something that is really, really important to us. But because we're so hyper focused on that, we've got the most experience and the deepest expertise in this sector. So for those of your listeners who are self-employed and they're looking for who are the sole trader, financial admin, tax specialists in the country, it's us. And does that mean that we have to turn away a bunch of customers? Yes, it does. But we're very proud of the position that we've got in this segment of the market.
Funnily, you should say that because I have a series of members who are sole traders and I don't want them to burn all their money. So is there something that you can do for CDA members?
Yeah, absolutely. So we've got a promo code that's we've activated for you. The promo code is CDIA. And what that does is it's kind of a try before you buy promo code. So the way the Hnry system works, as I described before, is that you get your money paid into your Hnry account and we automatically calculate and pay the tax for you. Like in case you're concerned, it's a pass-through account. So we're not holding the money for you. The tax money is separated, paid to the tax office. The rest goes to you immediately for the purpose of us doing that work. And we know people, if you're trying out any new service where your money is getting paid into, you're like, oh, I'm not really sure about this. And so just to give you that peace of mind, the first $1,000 that you have processed into that account, we'll do it for free if you use promo code CDIA. The way I didn't describe before, Paul, is the way our fee structure works is ours is a pay-as-you-go model. So we don't charge any subscription fees at all. We take 1% of your self-employed income as our fee. It's capped at $1,500 a year, and that includes the entirety of our service. So you unlimited payments, unlimited quotes, unlimited invoices, unlimited expenses, either via your Hnry Visa debit card or your own expenses that you approve, upload manually, and also access to our accountancy service where we do all your lodgements for you as well. So that's all covered by that 1%. And, to give you the peace of mind around like, does it work before I pay them any money? Get your first invoice for up to $1,000 or multiple invoices. I'm guessing your members are probably invoicing more than $1,000. The first $1,000 will be processed for free. And then, there's no lock-in period as well. The way to stop using Hnry is you just stop using it. You stop getting paid into your Hnry account. We don't charge you anymore. So if you don't like it after that first invoice for $1,000, just tell your clients to pay you elsewhere and you don't get charged any money. There's no subscription fee that expires in a month or 3 months' time.
Yeah, look, I'll be shameless, as I said at the start. I'm a Hnry customer, a very happy Hnry customer. I went through 5 accountants in the past 5 years before I found Hnry. And the reason why I kind of stuck with it is because I was finally being asked questions that I hadn't been asked before, that I sat there and thought, okay, someone's actually thinking here. So,
right.
Yeah, that's worked really well for me. Okay, so let's wrap it all up here. At the end of this episode of the podcast, what should listeners do? What are 3 easy things that they could do to say, do a bit of a health check on where they are from an accounting perspective, or practical steps can they take?
Great question. So the first thing is, particularly given we're in, if you're listening in Australia, we're in the first couple of months or the first quarter of a new financial year. The first thing is to know, am I on top of my tax obligations? One, do I have tax debt that either maybe I haven't done my lodgement for the last financial year, so I don't know, or you do know and you have debt, find out why. Do you have an understanding of how much tax you're going to be owing? At what point are you on quarterly payment plans with the ATO, annual payment cycle with the ATO? So getting on top of your tax from the start of the financial year is super important because you don't want to be getting into that debt cycle. The second thing is making sure that you have a clear separation between, from money in and money out. And referencing the travel conversation we had perhaps before, is what is business and what is personal, and having a system in place that allows you to separate the business from the personal so that whilst it all in the end goes into one tax return, you know what you can and can't claim and how you can make it easy to claim certain things. And the third thing is like, whether you use Henry or whether you use something else, like, we talked about the fact that like as integrators, you want to be spending as much time on your day job and then spending as much time on other activities, be it time with family and friends, be it hobbies, be it recreational stuff, be it sleeping. You don't want to be spending any time on tax and financial admin. So the earlier you invest in setting up systems and processes, either third-party systems or your own systems and processes, the easier you make your life down the track, and you don't spend those late nights and weekends, laboriously going through all this tax stuff when, your mates are out having a good time. So those sort of three things. So getting on top of your tax, making sure you've got a clear system in place for separating business and personal, and then investing in the right systems and processes to make sure that you can minimize the amount of time you spend on this stuff. I think the last thing I would say is that I imagine that integrators, sometimes your income can be a bit lumpy, because I'm guessing there's sort of project based, and even your expenditures for that matter can be lumpy, which makes the tax side of things even harder. Because when you've got consistent salary income, you're making $5,000-$10,000, whatever it is a month. Your tax situation, but more importantly in this regard, your cash flow is a lot more predictable. And so I'm probably going to then double down on my previous point around having a system in place. If your income and expenditure is more lumpy, then having a system in place is even more important, because the last thing you want is to be in a position where you have massive cash shortfalls. Like in any small business, cash is king, but in the self-employed market, it is absolutely like whatever above a king is an emperor. It is vitally important. So making sure you're getting ahead of things, then either adapt in a agile way or be able to predict anything that might come down the track, or, have a system that works on your behalf rather than you trying to scramble is super, super important when you're dealing in a business that's got lumpy income and expenditures. That's super important.
That was Karan Anand from Hnry. And if you're a sole trader still juggling spreadsheets, tax estimates, and unanswered ATO letters, maybe it's time to do things differently. This episode highlighted a simple truth. Being great on the tools doesn't mean you have to be great with tax codes. And thankfully, with services like Hnry, you don't have to be. If you're ready to hand over the admin, here's a great place to start. Use promo code CEDIA to get your first $1,000 of invoices processed for free at hnry.com.au. That's hnry.com.au. There are no subscriptions, no paperwork, just smarter support for sole traders. If you've got feedback, guest ideas, or just want to share how you're managing your business behind the scenes, I'd love to hear from you. Email me at info@masterintegrator.com.au or connect on LinkedIn. Thanks again to our sponsors, Chords, NetVio, and Connected Magazine, for supporting the podcast, and the people who keep this industry moving. Until next time, quote smart, invoice smarter, and build a business that works as hard as you do. Thanks for listening to Master Integrator. I'm Paul Skelton. I'll see you next time.